there was some tweak in the franchisee model. So if you could elaborate on that as well.
No, I can't elaborate much on that. See, so these are the business strategy. So that we are looking at the EBITDA or gross margin improvement versus quarter one of last year or quarter one of 22-23. But the correct way will be to look at quarter three and quarter four. So our EBITDA margin in quarter three was around 11% and Q4 was 7.7%. And we said very clearly that no, this industry is clearly is subject to seasonal variations and clearly subject to price volatility. So whenever price volatility happens in one quarter or other quarter, it will show you EBITDA will get impacted temporarily. So long as a company is doing a 90% or 95 or 100% margin, the hedging, 90 to 100% hedging, they will remain fully protected, but from accounting perspective, the gross margin may look muted. And hence it is important to look at the gross margin and EBITDA over 2 to 3 quarters, which may not fall within the same financial year. I'm qualifying these sentences. Right.
So for FY25, basically the gross margin would be in the normalized range of 15.5%, 15 to 16%.
Yeah. We have said 14.5. We have said 14.5 to 15%, and EBITDA we have said 7 to 8%. And this is subject to this custom duty impact. And we have said not only us, I think the entire industry, that custom duty impact has happened. So you can always you can understand 50 crore on the 230 to 40 crore of likely PAT. So we will take necessary actions to recover this custom duty impact by multiple actions are there which everybody will take.
Okay, got it. And lastly, given that the gold exchange component has been increasing QOQ since the last few quarters, what would you attribute this to? I mean, one part of it is that, of course, the elevated gold prices and consumer preference for organized retail has gone up.
What is the attribution? Higher gold exchange clearly is for two reasons. One is the increasing gold price, and which is a major reason. The customer has to buy gold, he doesn't have money, and he brings the old gold. Secondly, the faith and trust and movement from unorganized to organized in the respective market. So in our market also, as we are market leader, this consistent increase, as we have said, that almost a major portion is a non-Senco gold. So clearly, the branding and faith and trust of Senco is improving, and we also want to take it to 40-45%.
And if you remember, just to add to this, that even in the last financial year or last few quarters, we saw an increase in old gold exchange, and we also shared some data on non-Senco gold coming into us and people exchanging, which showed that there is a preference of consumers towards the brands, not just us, but all brands, right? Because all the top jewelry brands right now are giving such offers to the consumer that even if they bring their other kind of old gold that has been bought by other jewelers, they would get the same kind of facility if it is above a certain purity. So I think that's what is attracting the consumers into the brands.
Got it. So where I was getting at is that at company and brand specific initiatives, we have increased our marketing thrust as well, which has also contributed to the increase in exchange mix. Would that be a fair conclusion?
Marketing expense.
No, marketing expenses marketing expenses cannot be linked to old gold. But you can say
we are promoting.
Yes, so we are promoting, we are increasing marketing expenditure. Customer is coming toward the footfall, which is the objective of the marketing expenses. Then he brings his own old gold. For us, old gold is just a good currency. I will say old gold for us is a green currency. It's our commitment to ESG. And it is saving of the precious foreign exchange for India. So it's a good social service. We think that as a organization, citizen, we can do for our beloved country.
That's all from my side. I'll join back with you. Thank you.
Thank you. We have our next question from the line of Avi Mehta from Acquire Group Limited. Please go ahead.
Yeah. Hi, am I audible?
Yes, sir.
Yes.
Yeah, hi, Suvankar and Sanjay. First, I wanted to just, pick up on the last question about growth. Now, the 18 to 20% growth that we saw, is there more front-ended due to this front-ending of demand due to this custom duty cut that you see? And more importantly, just to understand the demand environment, you pointed towards some weakness in a segment which is concerned about incomes and maybe the entry level. Has that changed?
Yes, in the last 15, 20 days, after the duty cut, we are seeing a change of the lower entry level ticket sizes. So that is one part of the question that you have given. And the front ending aspect of it is basically that, when there is a sudden reduction in price, and internationally, if you look at it, that the global uncertainties continue to remain, and the Fed rate cut and all of those aspects are factors that will lead to increasing of the international gold rates. So I think, from our perspective and jewelers' perspective, I think consumers are being made aware of those facts and the possibility of international prices going up. So they are being pushed or inspired and motivated to come and do their booking, buying for the coming seasons. So this is how it's happening right now.
Got it. And
Again, if I can add here, so what we said that in the second quarter the growth has happened. Higher growth is happening in the franchisee stores versus last year. So which clearly indicates that the tier 3 and tier 4 town demand is coming back, and agriculture sector, good monsoon, stabilization of the economy post elections, faith in the government policy, a pro farmer policy. I think most of them that's why the demand is coming back. And SSG also, one other participant asked earlier, I think Siri said asked. So as you had said earlier that the SSG is usually 60 to 70% of total growth. SSG has also improved significantly, especially the franchisee one. So we are on course to 20% total growth, 13 to 14% SSG.
Got it.
As you can see today.
Okay, got it, Sanjay. So just a clarification, if I may, has the change in discounting levels also happened after this duty cut, or is that something that remains elevated? Because what the aspects that you alluded to about gold price rising further, does that worry you that this discounting is something that can sustain for a longer time?
No, so for the short term, I think that this duty cut has affected every jeweler. So everyone is conscious of the fact, and there will be plans and efforts towards rationalizing it. I wouldn't say it will completely stop, but things will get rationalized. So that will happen till the time that if the gold prices again shoot up very fast in a very short period of time high, then again for those short-term, attracting of footfalls and customers, it might happen. But if markets remain stable, then I think there will be rationalized discounting. So maybe, my answer is kind of a balanced answer, because very honestly, it's a very dynamic market, but based on situation, things will change. But if the situation remains stable, things will be rational.
Got it. And just the second bit, Suvankar, was on this lab-grown diamond foray. Now, how's the feedback been, and do you see, from a very broader perspective, do you see this, initiation or customer movement towards lab-grown in any way hurting the luxury and exclusive feel that typically has been associated with diamond jewelry?
So there are two ways to look at it. Yes, there was a aspirational and a luxury feel to diamond jewelry, and I think a lot of effort is being made by the industry towards building up that, continuing and building up it further with the formation of Natural Diamond Council and promoting of natural diamonds. And it is rare. The fact is that it is rare, and it takes so much effort to make it. But the lab-grown aspect of it is also picking up, and especially it is in the bigger size diamonds that I think the market is getting impacted more because now you can, get it at a much lower price and you can fulfill your desire. So I think in the smaller size diamonds, it won't be so much affected. So in terms of fashion and in terms of daily wear and casual wear, for the smaller size diamond, the natural diamonds will continue to play a role in terms of modernity and aspiration. But in the bigger size diamonds, while the people who will buy for their special occasions, of weddings, of their own weddings, of engagement with the natural diamonds, but for fashion, for the impulsive purchases or for the destination wedding, which is again another segment where people would want to wear exclusive designs, but for natural diamonds, those designs become expensive to carry. So those are the segments in which lab-grown diamonds, and with the wedding season in mind, I'm talking about it, will have a role to play. So this is how we have to look at it.
Okay, and how's the feedback been? I mean, how are consumers kind of looking at this? Any initial
No, it is. I would tell you that what we saw, not just with our company, we are also building up the brand, doing pilot with 3-4 stores, trying to reach out to customers, because we have to play a very balanced approach, right? Because we are in the though we have created a sub brand and trying to create a different identity, but we have to protect the natural diamonds and ensure that people continue to aspire for it, as well as see the consumer behavior with the lab-grown diamonds. But what I saw in the exhibition, where we could see various companies, jewelers, big and small, everyone coming, there has been a lot of curiosity and increased curiosity and more acceptance. I think these are the words that should be noted that is happening in the industry. Now the information population to the consumer will gradually happen. So the future is there, but it will not be able to completely take over the segment. It will have a small role to play in the fashion segment. I think that's how we have to look at it.
Got it, Sumakar. Thanks a lot. That's all from my side. Thanks very much.
Thank you. We have our next question from the line of Disha Podar from Caribbean Asset Managers. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah, Disha, you're audible.
Thank you so much for the chance. So I just wanted to understand that you have opened, one store in Dubai. So I wanted to understand the strategy of, opening further more stores abroad, and which regions would we be targeting, and would the economics be kind of similar, or how should we look at that?
No, Drisha, I'll tell you this is our, I would say the beginning and the first step towards, increasing the global presence, but we will have a very calibrated approach, and we will want to understand, the market and the sentiments, and, we would like to play our strategy, as I said, that, taking more product centric and karigari centric and design centric, and try to reach out to multiple consumers, not only the Indian diaspora. So there are no such big plans of many stores, but we will surely keep our opportunities open if there are, like the way we have been expanding through our franchisee model in India. We will always look for any kind of opportunities if they come in, but it is more important that we first build the brand and establish ourselves with our products and our services. So I think we will be in a very methodical and a calibrated manner doing our expansion abroad.
Understood. And secondly, sir, on the growth that you mentioned that, we'll be targeting about 18 to 20% growth for the full year. So how much of this can we expect to come in from SSG, and how much from the new 18 to 20 stores that we are opening?
That SSG will be around 10 to 14%. But 11, between 11, when we say 18 to 20, it means 11 to 13, 14 SSG. So the major contribution anyway comes from the SSG stores only.
Right. Okay. Thank you so much for this answer, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to take questions from all the participants in the conference, please restrict yourself to two questions per participant. Should you have a follow-up questions, we request you to rejoin the queue. The next question is from the line of Bhavya Gandhi from Dalal and Broacha Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. So just wanted to understand, with respect to your lab-grown diamond jewelry store, what sales per store are we targeting? Have we even reached break-even? What sort of period do we need to reach the break-even levels?
No, it's a very good question, and let me tell you that we haven't reached break-even yet, right? It's been a 4-5 month journey. We are taking efforts to build the awareness. The targets, I might not be very comfortable to share the targets right now because of the circumstances. But let me tell you that the break-even is not reached yet, and it's the early stages of the journey. So yes, Mr. Banta.
Yeah. No, I want to add one second that we have said very clearly that in the current year, in 24-25, when we talk about the stainless segment, which consists lab-grown, perfume, and the leather bags, the contribution is not likely to be more than 100 crores. I have said earlier 50 crores. I think between 50 to 100 crores. So it is not a very important part of our strategy for the current financial year. It's part of our vision to be a lifestyle partner.
Right. No, I was just trying to understand because the stud ratio is on a higher side when it comes to lab-grown diamonds because your stud ratio is far better than your normal natural diamonds, right? So I just want to understand.
How are you saying it? I don't know. How would you be defining it? I don't know. Your calculation might not be correct to look at it that way.
Okay, so if you can help me understand, because lab-grown diamond, it's lesser caratage and daily wear jewelry, most of them that you are targeting. So I believe that the stud ratio is on a higher side, or is it not?
No, see, compared to a natural diamond, the stud ratio, is a combination of how we define stud ratio means we don't mean the stud ratio for the product. What we mean to say is that when we are selling, say, 100 jewelry, when we say which is 11.5%, that means that for us, 11.5% is the diamond jewelry or studded jewelry. That is how we define as stud ratio. And many of our industries have achieved much better numbers in terms of 20% stud ratio or higher. So this is our definition of ratio. And I think what you say is that in any particular product, what is the ratio of gold vis-a-vis the stone component. So when the stone is a cubic zirconia or any kind of a semi-precious stone, then the value of the stone is lower compared to the gold value of the product. So there, obviously, that would mean more money that you can earn, lesser money that you can earn from the stone. But compared to a cubic zirconia or a semi-precious stone or American diamonds as they call it, obviously lab-grown is better. But compared to the natural diamond, the value of the lab-grown will be lower. So it is going to be a studded jewelry. There will be certain gross margins associated with it, but the ratio might not be that impactful in the overall stud ratio that we call it.
Okay, just let me ask in another way. I could have rephrased it in a better way. So, you are trying to say that 100 pieces if you were to sell, and 11% is the stud ratio, that 11% is the diamond jewelry sales, diamond jewelry pieces, I would say. That is how you calculate stud ratio?
Value. Let me make it more simple. Let's say we sell around 11 to 12 lakhs jewelry. So when we say 15% is will be 15% of pieces. So when we say my total sales is around 5,200 crore, 11% is around 550 to 600 crore is the diamond jewelry sale. Within around 55 to 60%. So when you look at the statute, you find like 5 to 6%. When now we started at post listing, we started using the term stud ratio. That is 11%.
Okay, fair enough. And last question, if I can squeeze in. So what would be the pecking order for the studded elements? I mean, if you can just throw, I mean, obviously diamonds has to be number one, natural diamonds, but post that, what would be the elements of studs?
Okay. So diamond is the most important element. The pecking order in the stud.
Your voice is not audible clearly.
Yeah, I'm saying that mean to say in the studded element of it, the pecking order would be diamonds will be the topmost and highest share. Then there would be emeralds and rubies, right? Those will be there. And I must tell all of you, and you would be seeing it soon, that colored gemstones combined with diamonds, those have been in trend, and those will soon be the coming season designs we would see more and more. So in diamond there would be cut and polished diamond and polkis also, uncut diamonds. So that will be there along in the diamond part. Then rubies, emeralds. Then there are these other gemstones. Now lab grown is there. Now lab grown can gradually come up and be in the second or the third position, but that will take some time. So this is how we have to look at it.
Got it, sir. Fair enough. Thank you so much. Really helpful. Yeah, thank you. That's it from mine.
Thank you. We have our next question from the line of Vikrant Kashyap from Asian Market Securities. Please go ahead.
Good morning, Subhankar ji and Sanjay ji. Congratulations on very good set of numbers. First question is on your hedging policy. So you mentioned that 45 or maybe 55 is the hedge ratio between MCX and gold metal loan. But since we have gold exchange coming in and we have monthly schemes running, doesn't they provide natural hedging to you? Yeah, so I will explain to you. See, one is that a hedging when okay. So I'm saying when we are talking about hedging, we are talking about the inventory, not of the daily purchase sale. Okay. On daily basis, we get around, let's say, 25 to 30 kg of gold that it's hedged. But I have an inventory of 2,800 kg. So we have to hedge that inventory, because if the price falls and if the price remains fallen for forever or for 6 months, I have to sell my old inventory at a lesser price. You got me? Mm-hmm. So almost 50% of that inventory. So when we talk about 2,800 kg, around 1,400 kg is the gold metal loan with the banks. So the price is not fixed, and if the price falls, yeah. So 50% is gold metal loan unfixed, and balance around 45 to 50% is the MCX future sale. Mm-hmm. So I now I understand your point, Sanjay. My next question is no, it's very clear. The second part bit on in that, do we see gold metal loan increasing going forward for us, and the mix will change? So that is the intent. So we have said earlier that the gold metal loan percentage in our borrowing, we want to take it to 75%, so that my blended interest cost also falls. But it is a dynamics which we have to close with the bankers. Intent is very clearly to increase the GML as a percentage of total borrowing.
But we need to keep in mind that GML will not have an impact on if there is any further duty cut, then GML will not be the right way to hedge. So we have to balance it. So that is the thing we need to keep in mind.
Okay, great. Second question is on the demand side. Since we have strong penetration in tier 2 and below markets in the eastern region, have you seen any kind of reactions from unorganized players post this duty cut? Have they reacted differently, and what kind of impact you have seen on their businesses?
So till now we haven't seen much of reaction from unorganized players. See, the way I think organized
You are not audible.
Hello. I'm saying that the way the organized players taking, taking gold loan, doing exchange, the unorganized players are not doing so much of hedging. So they would be getting an impact on the financials for sure. But for now, because of the duty cut, the way we are also excited and elated that yes, consumers are coming and the transactions are happening and, turnover is happening, I think they are also happy about it, of the fact, and they are positive also and optimistic and thinking that no problem, again the gold prices will gradually go up. So it's a short-term impact and in the long run, it will all work out well. So I think that's the thought process that they are having. And there is no such, great reaction from their side.
Okay. Thank you, Sumanji. This is Subra.
Thank you. We have our next question from the line of Devansh Negotia from Safe Enterprises. Please go ahead.
Yeah. So thanks for the opportunity. Sir, regarding the impact that we mentioned for 50 crores only for the duty cut, but I mean, if we look at our closing inventory, even for, March, that is almost 2,400 crores. And a 9% cut on that translates to almost 180-200 crore impact. So why, can you help us understand the math behind 50 crores impact which you mentioned?
No, so you have to see that gold loan is what percentage of it, and the impact on the duty cut on the duty paid gold or that you take on gold loan. But the hedging that you are doing on the exchange, there you are not getting impacted. There you are getting a straight benefit. So it is only to that extent. And the 2,400 crore, just, because see, all of you will be doing your mathematics and doing your modeling. You have to understand that 2,400 crore mein, there are 400 to 500 crore of diamond inventory or other stones inventory, correct? So then you're taking the gold inventory only. And in that gold inventory, partially it is gold loan and partially it is MCX hedge. So then you do your mathematics and you come to a number. So I leave that mathematics and calculation to you. And then you come to your number.
So, but even diamond inventory has been correcting almost like 10% every quarter for last one and a half years has been very weak.
See, the bigger size diamond is what has corrected more, which is like bigger size, above 50 cents. But, the smaller size diamonds, that correction is very limited. Right, and if you look at our inventory or our sales, 80% is the smaller size diamond. So the impact of the diamond value has not been. I wouldn't say it would be much of an impact on the books.
Okay. Okay. And so just one last question on gross margins. I'm still confused because the competition was very high. And even gold had corrected in this quarter. Not able to understand the reason behind gross margin expansion.
Gold has not corrected in this quarter. In Q1, gold has not corrected. Q2, gold has corrected. Right? So you need to ensure that, yes, the competition was high in Q1. And in that competitive intensity, there have been a lot of discounting and lot of whatever price cutting that has happened and that pressure on margins was there. But at the same time, you need to understand that optimization of stocks at what, how are you have sold more, but because of the gold price rise, you will not buy to the extent that you have sold. How do you manage your inventory? There are so many aspects to it. So the price correction is in Q2. So Q2 will be something that you will need to look forward on the impact of it. But Q1 was not so much on the price correction.
Q2 has impact of custom duty as well as fall in gold prices. Right?
Yes, Q2 has impact of custom duty and falling gold price. But it's more the custom duty that is impacting. All the gold price falling is also getting averaged out. So, yes.
And so we mentioned...
sorry to interrupt, sir. May I request you to please rejoin the queue?